Let's take it straight to our top story. And the Reserve Bank of India stands its ground in the face of mounting pressure from the government and the industry alike. The central bank has kept the key rates unchanged, citing stubborn consumer price inflation. But Governor D. Subbarao reiterated that there is a likelihood of the policy easing by the month of January. Our banking editor, George Cherrier, now joins in from the RBI headquarters. RBI is the Reserve... George, is the Reserve Bank of India now turning dovish?
Oh yes, the stance of the RBI now does become very dovish because, for one, it has pointed out that headline numbers, headline inflation numbers in the month of October and November were actually well below the RBI's projected level of 7.5%. So you had 7.45% in October, you had 7.24% in November. It's also said that the fact that core inflation dropping from a level of 5.2% to 4.5% is a hugely comforting factor. Also saying that from here on, the RBI's monetary policy stance is going to be squarely focused on supporting growth. It's also said that managing liquidity conditions is going to be largely focused on supporting growth. So the overall focus of the RBI really shifting to growth from inflation management. It hasn't, however, said that inflationary pressures have gone away. It has said that while it will now focus on supporting growth, it will keep an eye out on inflation and work also at the same time in curtailing inflationary pressure. So again, sticking to its guidance that you will see a rate cut in the fourth quarter of the current financial year. So the market really working on the assumption that on the 29th of January you will see a quarter percentage point cut. So here onwards, it is safe to assume that the rate cycle is going to turn, possibly beginning the 29th of January, but a hugely dovish stance from the RBI to the extent that inflation somewhere seems to be showing signs of coming under control.
Thanks for those details, George. Let's also hear at Subir Gokaran, Deputy Governor of the Reserve Bank of India, on the monetary policy stance.
October was based on a projection which suggested the numbers would go up a little bit in Q3 and start to subside in sort of second part of later half of Q4 and onwards. The two numbers that we've had since the October review have actually come in below our projection. So in that sense, we are seeing at least that the trajectory is moving favorably. That bump is not happening. We still think that there may be some rise in inflation over the next couple of months. But essentially, what this is doing is validating our projection that the trend is now softening. And based on that, our guidance given in October has been reinforced, saying that we did see the room for rate cuts emerging in the fourth quarter, and we have reinforced that guidance in this mid-quarter review as well.
Would it be fair to assume, sir, that you wanted to see the trajectory at least for one more month before taking a call on the rates?
I think that would be one motivation for making a decision to not to do a rate cut now. That this was quite a sharp decline because there was a somewhat, if not very sharp, but at least significant increase revision in the September numbers, which took that month's final numbers up to 8%. And of course, the CPI is still hovering around, close to 10. So it's the same story is not emerging from all the indices. Of course, we use the WPI as a benchmark. We use the WPI to measure core. So in that sense, we are sticking to our watching that very closely in terms of its trajectory. But
okay, that is RBI Deputy Governor Subir Gokaran speaking about the lack of action from the Reserve Bank of India as well as some of the inflation targets. Meantime, Pradeep Chaudhary, Chairman of State Bank of India, spoke exclusively to ET Now about the RBI holding its key rate steady and what exactly this means.
It's a no-change policy. See, it's not a question of disappointed or rejoicing. We had made a recommendation, but then it's RBI's prerogative and they decide in the best interest of the economy and the country.
Okay. And of course, the governor has also given guidance that Q4 will actually see the easing of interest rates. So how much of expectations are there? How much of a rate cut are you expecting going forward?
We had recommended for a 50 basis point cut in CRR as also a 50 basis point cut in repo, because we think that would be substantive enough to make an impact on the economy.
Okay. And sir, as far as SBI is concerned, you did say that in December you will be looking at your rates once again, be it the RBI policy or not. So are you going to be looking at your rates anytime soon? Could we expect a base rate cut coming soon?
No, I can't say a base rate cut, but yes, the Asset Liability Committee is meeting later today in the evening.
Okay. So could we expect something on the base rate, maybe a quarter% or something lesser than that?
No, 0.25% is out of question. Even 5 basis points looks difficult.
Okay.
So we need significant triggers to lower the base rate. The deposit rates have to come down, only then the base rates come down. Or the CRR or the repo cuts, if they happen, then there is a trigger for base rate cut.
Okay.
Without these two ground conditions, it's difficult to envisage a cut in the base rate.
Okay, so could it be correct to assume that we would not see a base rate cuts anytime soon by SBI, and we'll have to wait maybe a month or so more?
Yeah, the ground conditions have not changed significantly, but that is, I will leave that to our ALCO to decide rather than deciding it beforehand.
Okay, so lastly about credit growth, because the festive season has been around the corner, but still industry-wise it's quite muted. But what has been SBI's experience? How much growth have you seen, and what are you seeing going forward?
We have seen a growth of about 65,000 crores from year to date, that is the financial year. That translates to about 9 to 10%. But the credit growth demand has been very strong from the consumer sector, the home and the car loan.
Okay, apart from Prateep Chaudhary, let's also get in some of the other expert voices on their take of RBI's credit policy stance today.
Clearly, they're taking a decision keeping in mind that their main job is combating inflation, but also they have some sort of incentive to see growth in the country. So, I think it's good news that they see for the possibility of cutting interest rates.
Reserve Bank has taken a cautious stand. Some people might say too cautious a stand, but the numbers as indicated by the CPI and WPI have been contradictory. There is a clear indication that the Reserve Bank would in January follow a policy of monetary easing.
The priority for our country is really investment and growth. And I think if we push those by taking policy measures, and we have initiated those, some of these measures, then certainly India would achieve what we all wanted to achieve, which is a rate of growth of at least 7 to 8% over the next year or two.
In January, there might be a 25, maybe even a 50 basis points rate cut, unless we see very sharp declines, let's say, in commodity prices. Don't really see the space available for RBI to cut deeply in 2013, even if growth slows down.
If expectations are not backed up by actual implementation, then I think you could see a correction going into the second quarter of the next calendar year. But I think the immediate trend is up, regardless of what has happened today.
Meantime, in a big climb down that will ensure the passage of the banking bill, the Parliamentary Affairs Minister Kamal Nath says that the government will drop the contentious forward contract clause. Let's get in Mrinalini Krishna, who joins in with the latest details on what exactly this is likely to mean. Mrinalini.
As the Parliamentary Affairs Minister Kamal Nath said, the government will be dropping the forward contracts clause as far as the banking bill is concerned. Remember, this is a crucial bit of legislation because the banking bill will pave way for the new bank licenses. BJP had demanded the dropping of the forward contracts clause. Remember, the bone of contention here really was that the Finance Minister introduced this new clause by invoking Rule 80, and the BJP had demanded that the bill be sent back to the Parliamentary Standing Committee on Finance to vet the clause again. However, the Finance Minister had met leaders of the opposition, and he did put his stance forward, saying that this forward contracts clause is actually a recommendation of the Parliamentary Standing Committee on Food and Consumer Affairs. But it seems, of course, now that there has been a settlement between the government and the principal opposition party, and that perhaps will ensure a smooth passage of this bill before the Parliament. But what is crucial here to understand is that there are only 2 days to go, and the government is hopeful of bringing the insurance as well as the pension bills before the House. Remember, these two have also got a contentious clause of the 49% foreign capital. Remember, the cabinet had cleared 49% foreign capital in both insurance and pension sectors. The Parliamentary Standing Committee on Finance is opposed to increasing the FDI cap in both sectors from 26% to 49%. The government may, however, restrict the FDI to 26% and bring in the rest of the 23% via via other foreign investors. So clearly the government really hopeful of bringing these two bills also before the House and hoping that they reach a suitable solution to bring both these bills to a smooth passage in the Parliament as well.
Thanks very much, Mrinalini, for giving us those details. Meantime, straight to the equity markets, and what started off as a fairly quiet day saw a good intraday reversal, and by the end of the day it was firmly in the green for the frontliners. Broader markets too followed the same trajectory, and by the end of the day it was higher by 0.5% for the mid and the small cap index. You had the real estate counters which did very well for themselves. So today the realty index witnessed quite a bit of traction. Apart from that, metals also in the limelight on the upside. Capital goods also followed suit, and it was only the oil and gas index which by the end of the day was a bit off. So big index gainers came in the form of BHEL. Bharti Airtel provided good support to the index. Metals names really did well, so the likes of Tata Steel too featured on the list, and DLF higher by 2.5%. Stocks and news, you had the metal stocks which continued to rally in today's session as well. A lot of brokerages have also upgraded the Indian steel sector, which is why some of these counters were up and about. Jaiprakash Power was down in today's session on the back of that block deal that took place, so down by 6% by the day's close. Kingfisher Airlines, Vijay Mallya, of course, he failed to impress on the fresh loans for Kingfisher Airlines after the meeting with the lenders, but Kingfisher will be bringing in over 400 crore rupees to resume their operations in a phased manner. Also, the talks with Etihad are likely to culminate for a stake sale, which is likely to be in the final leg with either Jet Airways or Kingfisher Airlines, the counter up in the session. All of your real estate counters did very well for themselves, the likes of Kolte Patil, which, by the way, over the last 3 days has seen an up move of close to 42%. Unitech, Indiabulls Real Estate, HDIL, and even some of the other smaller names did very well for themselves. Godrej Industries was in focus as it sold close to 20% in its subsidiary Godrej Agrivet to Singapore-based Temasek for over 570 crore rupees. Some of the index losers for today included the auto packs, so names like Maruti Suzuki, Bajaj Auto looked a bit weak. You had ONGC also, which weighed down on the index. And from the banking arena, and Axis Bank didn't recover, so 1353 on last tick. All in all, a fairly decent day of recovery for the markets. Let's get in Navneet Saluja to find out how the F&O activity shaped up for today. What did it look like, Navneet?
Well, Awan, it was a good day. You had the December futures closing above that 5900 mark at about 59.31. The premium also went up to about 37 points to the spot Nifty, and during the day for the December futures, we saw built up about 7 lakh shares, and looking at the options data, there was more of put writing in the system today. That's why you had the Nifty PCR inching upwards to about 1.06, and in terms of maximum open interest addition on the put side, you had 5800 strike, which added close to 8 lakh shares, and also 5900 put strike added about 8 lakh shares. On the call side, you had unwinding seen at 6000 levels, which shed 3.4 lakh shares, and 6100 call strike added about 8.6 lakh shares. And looking at the stock futures, among the Nifty gainers, it was Bharti Airtel and BHEL which did very well for themselves. Long positions were being built up there, and on the long side, as you mentioned, it was the metals pack which was shining in today's trading session. So counters like Tata Steel, Hindalco, Jindal Steel and Power did well, so long positions there. And on the short side, you had Maruti, and some of the mid-cap gainers were Unitech, REC, Shriram Transport, JSW Steel. All these counters had good trading session. Long positions were being built up for all these counters. And on the short side, you had JP Power and Hindustan Zinc, where short positions were built up. Well, in terms of participation, it was a good day. If you look at the turnover on NSE, by the end of the day, it was about 1.92 lakh crore.
Thanks very much, Navneet, for giving us the latest in the futures and options market. Now, the board of Tata Sons today officially appointed Cyrus Mistry as the chairman of Tata Sons from 28th of December, when Ratan Tata is set to retire from the Tata Group as the chairman. Remember, Ratan Tata has been conferred the title of Honorary Chairman Emeritus. Meantime, less than 3 weeks after the recently retired CBI director said that the investigation in the Aircel Maxis deal has hit a roadblock due to no information coming in from Malaysia, the Malaysian government, we understand today, has said that it has nothing to do with the investigation, given it is a matter between two private companies.
Government is not involved in this. You see, this is a private sector project. Maxis is private and Astral is another private organization. You see. So the Malaysian government is not involved in this kind of business. You see. The relevant agencies to carry out the investigations. You see. They will not investigate the government. You see. They will investigate the private sector companies.
Let's get in Devdutt Das, who now joins in with the latest exclusive details from New Delhi. Devdutt, does this mean that the Marans can now breathe easy?
You know, the Malaysian government continues with its stance of not wanting to share any details of Maxis's transactions with the Indian investigative agencies. It could prove to be a big stumbling block for the probe as far as CBI and ED are concerned. Now, what both these agencies are looking at are details of crucial financial transactions made by CBI that will nail, in fact, the kind of role that Dayanidhi Maran played in the entire Aircel Maxis deal. Remember, the allegations against Dayanidhi Maran are that he received kickbacks worth of more than 700 crore from Maxis Communications, which is Singapore-based, to force C. Sivasankaran, who was Aircel's then promoter, to sell his majority stake to Maxis, till which time any 2G spectrum was not allowed and given to Aircel at any cost. So these are the crucial allegations that are being investigated, and unless the Malaysian government hands information to the Indian investigative agencies, it is going to be rather difficult for the CBI to prove anything as far as Dayanidhi Maran's role is concerned, and as far as that is concerned, then it could definitely be turn out to be a breather for Dayanidhi Maran.
Okay, that's a twist in the tail which could perhaps be a breather for Dayanidhi Maran. Thanks very much, Devdutt, for giving us those details. Meantime, to the aviation space, in India's aviation ministry will now look into complaints that allege airlines tampering with records of on-time performance. Companies like Indigo, SpiceJet and Jet Airways are on the government's radar for allegedly using the on-time phenomenon as a marketing gimmick. Let's get in Sumit Chaturvedi, who now joins in with the exclusive details. Sumit, what are you picking up and which are the airlines in the fray?
But first, I'll tell you the reason. Sometimes we wonder why many of us, while flying, reach our destination much before the arrival time given by the airline. Well, one reason for this is that the wrong or misleading flight timing given on the tickets by airline, and airlines generally add a margin of 30 to 45 minutes to their flying time, so that even if the aircraft is a bit late in arriving, it will still come under the given time on ticket to reach the destination. Well, this method actually helps airlines improve their on-time performance record, but this is not the right method, and that is why now Civil Aviation Ministry is planning to probe on-time performance records and methods used by airlines including Indigo, SpiceJet and Jet Airways. Government rules allow a margin of only 15 minutes to declare that a flight has arrived on time. Well, government is not likely to impose any penalty right now on these airlines in the beginning, and they'll be asked to use correct methods. Aviation Ministry can also allot more slots to airlines if the flying timing is measured correctly.
Okay, thanks very much, Sumit, for bringing us that interesting piece of information. So you've got some of the counters like SpiceJet or Jet Airways as well as Indigo, the companies which are on the government's radar. Let's get you the latest with all the news that's flowing in from across the globe. US President Barack Obama and House of Representatives Speaker John Boehner met at the White House as talks on avoiding the fiscal cliff gather pace. Obama has made a new budget offer that would raise taxes by $1.2 trillion and increase the tax rate for households earning more than $400,000 a year. Boehner has signaled that he would agree to raising the tax rates for those earning more than $1 million per year. Now, sources suggest that Obama's current plan would cut $1.2 trillion in federal spending, including interest rate savings. Let's get in a check as to how the Wall Street futures are trading at this point in time, and it is an indication to a fairly positive start with the S&P 500 futures up by a good percent. The Dow futures not too far behind, a good 29 points higher by 0.2%. Apart from that, you have the European markets too, which gained on hopes of a resolution to the fiscal cliff. Meanwhile, an EU report stated that Greece's economy could shrink by more than 4.2% in 2013, pushing the country into the sixth straight year of recession. It's a bit of a mixed bag for the European markets. As we speak, you've got the CAC, which is down marginally. The DAX is holding up in the green, and you've got the FTSE also on your screen, which is holding up in the green. And as we kickstart our new series, A Year to the Ground, the first half of 2012, remember, was dominated by volatility on account of global risks. You had momentum which picked up within the second half of the year, and indices set to close with almost a 30% gain. So how will the market dynamics change in 2013, and will this be the year of new highs for Indian equities? ET Now's Krishna Kumar files this special report on the road ahead for the Indian equity markets.
After 4 years of underperformance, the Indian stock markets were back with a bang in the year 2012. Benchmark indices saw a rise of close to 30%, prompting sections of the market to believe that 2013 will be a breakout year.
There's a strong possibility that market can attain new high in the calendar year 2013. I mean, unless there's something catastrophic or something unforeseen happens either on global or domestic front, market has potential, because it's just the natural momentum of earnings and markets, trailing that will take the market to new highs.
But not everyone seems to be sharing the same kind of enthusiasm. Some believe that despite big gains, it was a bumpy ride and driven mainly by foreign investors.
One theme that is kind of building up inside me, as I think a little bit about what's going to happen to the world in 2013, I think global equities will have a very, very nasty year. But you're right. I think we'll have a strong start, and I think we'll have a terrible finish.
So there you have it. The consensus on predictions for the year 2013 is that there is no consensus. While markets are expected to touch new highs, volatility will be the order of the year as global economic uncertainties continue. The street, however, does agree on one point. Sentiment will largely be driven by the North Block's ability to push its reform agenda. Krishna Kumar, ET Now, Mumbai.
Okay, reform agenda big on the wish list for Dalal Street next year. But with that, we come to an end of this edition of Business Day. Thanks so much for watching.